let's just talk about this, right? The rest of the world's under some pressure. You've got the European market, you got China potentially slowing down, you got the whole emerging market disaster that's potentially out there. And so this money's going to come to the safety trade. So when you think about the U.S., it's certainly a safety trade. And so therefore, we're not nearly getting hit as hard. Although, if this continues, this contagion around the world, or this fear around the world, it's only a matter of time before they start to come here and really start to readjust prices. Look, you're seeing a lot in tech, certainly what's happening in Washington for sure. But people are also taking the opportunity to take some money out of these really high-performing tech names and either put that money and hold it on the side or reinvest it in some of the other new emerging ideas that are starting to present themselves.
Yeah, and Margie, the question is this a short-term phenomenon where we're going to see tech resume leadership, or the start of a potentially new trend as we go into the fall?
I think it's going to be more of the same. In other words, tech is going to maintain its leadership after this little bumpy pause through the end of the year, because it's still where the sustainable growth is. Certainly, a lot of these names have made so much money for investors this year. It's natural for nervous people to want to take a few chips off the table when we see a little bit of wobble in some of these names. But I think it's more of the same.
Rick, the dollar's somewhat all over the place today, and sterling's having quite a big impact on that. What's going on today?
You know, I think the word that best describes some of the issues that Kenny talked about, whether it's emerging markets, what's going on with various economies from China throughout Europe, divergence. You know, we traded at a time where the correlations were so high, all markets moved in sync, and we still see much of that in the fixed income space, but in other areas, divergence is getting bigger. And I think it's very fascinating, because this is going to be a big question for the rest of this year and potentially next year, that if the pillars of stability of the U.S. economy remain, how are investors globally going to deal with the divergence? Are they going to look at the numbers and think, well, when Europe turns around, I'm going to have a bigger wave to make more money if I invest now? Or are they going to stick with the U.S.? And I think the latter is probably the credible direction, but it's going to be an adjustment process for investors and the markets.
Yeah, I mean, on that stick with the U.S. theme, Kenny, sometimes when we see emerging market contagion, it doesn't necessarily infect the U.S. immediately. But this is spreading from places like Turkey and Argentina to bigger places like South Africa, Brazil, Indonesia. And the question is, how long can the U.S. stay safe?
Well, and so that's the question, right? I mean, ultimately, you don't want to see it spread beyond those emerging markets. You don't even want to go there. But if it starts to spread, that is starting to be the conversation amongst analysts and strategists now, saying then it is only a matter of time before they start to put pressure on the U.S. One way or the other, I still think, as you know, we're the safety trade. We're the strongest at the moment, by sure, in terms of our economies. We're doing very well. And so, therefore, I think any pullback in the U.S. market is going to be muted. I'm not looking for, all of a sudden the U.S. market to fall apart by any stretch. Come under pressure for sure, maybe, but I still think it's going to be the safest place.